Welcome to the Deep Dive, brought to you by Defiant, the on-chain lifestyle sports brand.
Great to be here.
Yeah, so today we're jumping straight into 5 key stories shaping DeFi, entertainment, and sports.
Trying to cut through the noise, get right to what matters.
Exactly. No fluff. Our mission, really, is to unpack these headlines. They might seem pretty disconnected, and show you the underlying currents, why they actually matter.
Yeah, you've got crypto regulation, market stuff, a big sports upset, even how you might pay your taxes soon. It's quite a mix.
It really is. So let's dive right into the DeFi and crypto side first. Big news possibly coming out of New York.
Right, this Assembly Bill A7788.
Yeah, tell us about that. It sounds like they're considering letting state agencies accept crypto.
That's the proposal.
Yeah.
Specifically things like Bitcoin, Ethereum for, taxes, rent payments, fines, other state fees.
Wow. Okay, so paying your taxes with Bitcoin in New York, that feels significant.
It would be. But a key point is that it's optional for the agencies. They wouldn't have to accept it.
Ah, okay, so not a mandate.
Not a mandate. And they'd also be allowed to tack on like a service fee to cover the processing costs, which makes sense.
Right, practicalities. And this isn't just an idea, it's moved forward.
Yeah, it's advanced to the Committee on Governmental Operations. If it, gets through and signed, it could take effect pretty quickly, maybe 90 days.
So why does this matter, big picture? Is this just New York or is it bigger?
Well, I mean, it's New York, right? A massive financial hub. So them even considering this signals a potential shift towards mainstream crypto adoption.
Okay.
It could pave the way for things like, actual state-level Bitcoin custody, figuring out vendor integrations.
The nuts and bolts of how that would even work.
Exactly. And, it also kind of puts a bit of pressure maybe on the federal level to get serious about crypto regulation.
So for listeners, this could mean more convenience, more legitimacy for using Bitcoin day to day.
Potentially, yeah. At least for those state interactions. But it also brings up questions like tax implications, how the state builds out that infrastructure.
Yeah, it's never simple. And speaking of complications, Attorney General Letitia James isn't exactly on board, is she? There's some pushback there.
That's a really crucial counterpoint. While this bill suggests openness at the state level, AG James is urging for much stricter federal regulation first.
Why? What are her main concerns?
Her view is that without a strong federal framework, you risk undermining the U.S. dollar's stability. And then there are the national security concerns. Illicit finance.
Right, the classic crypto worries,
Right.
passing traditional controls.
Precisely. She's worried about crypto being used to get around established financial oversight.
So it's this real tension, isn't it? Innovation versus regulation, the state maybe wanting to move forward, but others saying, hang on, let's get the big rules sorted federally first.
Exactly. It's not necessarily anti-technology, but it's a call for caution. She wants, clear anti-money laundering compliance registration for crypto issuers. She even suggested maybe excluding crypto from retirement accounts.
Wow. Okay, so very different perspectives playing out.
Yeah, it really highlights the complexity of fitting this, decentralized tech into the existing system. State versus federal, innovation versus risk mitigation. It's the central debate, really.
Definitely something to watch. Okay. Shifting slightly within crypto, but still on the regulatory front, the SEC and stablecoins. We've got some movement there. Looks like clearer rules.
Yeah, seems like it. The SEC's recent actions are providing a bit more clarity around the regulatory framework for stablecoins. Yeah. And that's been needed for a while.
And why is that clarity so important for stablecoins specifically?
Well, stablecoins are designed to be stable, pegged to fiat. So clear rules could really accelerate their use cases, especially things like cross-border payments.
Making international transfers faster, maybe cheaper?
Potentially, yeah. More efficient than maybe using more volatile cryptos or even some traditional rails. It could also just boost their adoption in general real-world commerce.
So for our listeners, this could mean more practical ways to send money, engage digitally?
Could be. And it also signals a maturing regulatory landscape, which often attracts more institutional capital. Bigger players might feel more comfortable getting involved with clearer rules.
Right, the institutional money waiting for the green light, or at least a clearer yellow light.
Exactly. Lower perceived risk often leads to more investment, more infrastructure building around these things, which ultimately could mean better, easier services for users.
Okay, interesting. Now let's look at the market itself. We saw a bit of a crypto rally recently tied to U.S. tariff news, but it didn't last.
Yeah, that was an interesting little episode. There was a temporary pause announced on some new U.S. tariffs, And the crypto market, including Bitcoin, saw a bit of jump. Bitcoin actually bounced after touching its 365-day moving average.
Okay, a positive reaction to macro news. But you said it didn't last?
No, the bullish momentum was pretty weak, frankly. The market seemed skeptical beyond just that initial relief. It fizzled out.
Any data backing that up?
Yeah, CryptoQuant, the analytics platform, put out some data suggesting Bitcoin is actually in one of its least bullish phases since way back in November 2022.
Really? That's quite bearish sounding.
Well, their bull score index was down at 10, which is very low. They said only one metric they track was positive, and that was just the price being above that 365-day moving average, which is more of a long-term trend thing anyway.
And didn't Bitcoin have a pretty big drop recently, too?
It did. It experienced its largest drawdown of this cycle, a 27% correction.
Yeah.
So quite significant.
So where do things stand now, technically? Are there levels people are watching?
Yeah. Analysts are noting potential resistance ceilings, basically around $84,000 and then $96,000 if the price were to climb. But the key support, the floor to watch, is that 365-day moving average, which is currently around $76,100.
And if it falls below that?
That could be a signal, potentially, of a shift towards a bear market. Needs confirmation, obviously, but it's a key level.
So what's the takeaway here? Macro news matters, but not enough on its own.
Pretty much. It shows the market's sensitive to geopolitics, sure, but it also highlights, I think, deeper underlying concerns.
Yeah.
Things about, real utility, ecosystem growth, and that long-term regulatory clarity we keep talking about.
Right. So for listeners, it's a reminder maybe not to get too swept up in short-term pumps based on headlines.
Exactly. Those might not signal a sustained bull run. You still need to look at the fundamentals adoption, actual usage, to gauge the market's real health.
Got it. Okay, let's pivot away from crypto now, shifting gears to entertainment, specifically golf. The Masters made some news with its prize money.
That's right. Yeah, they've increased the total prize purse to a record $21 million.
$21 million, wow.
Yeah, and the winner gets a cool $4.2 million of that, which is a full $1 million more than last year.
That's a serious jump. So, obviously great for the golfers, but why does this matter more broadly? Is it just inflation, or is there more to it?
Well, it reflects a wider trend, I think, across sports. Prize money keeps going up.
Yeah.
It's partly about attracting the absolute top talent, keeping them engaged, especially when there are competing leagues or tours popping up sometimes.
Right, competition for the stars.
Exactly.
Yeah.
And it's also about fan engagement. Bigger stakes can mean more drama, more attention. Plus, you've got the huge influence now of, technology, sports betting, massive media deals, all pumping more money into these traditional sports ecosystems.
So for the fans, it means maybe higher stakes, more intense competition to watch.
Potentially, yeah. And for the athletes themselves, it's obviously significant financial reward, but also gives them more leverage, in their careers, negotiations, sponsorships. It ups the ante all around.
Makes sense. Okay, finally, let's stick with sports, but head over to the baseball diamond. Something pretty shocking happened in L.A.
Oh, yeah. The Dodgers. Oof.
Tell us about it. A historic loss.
Yeah, the Chicago Cubs beat the Los Angeles Dodgers 16-0 at Dodger Stadium.
16-0, shutout. At home.
Yep. Apparently, it's the worst home shutout loss in the Dodgers' entire franchise history.
Wow. For a team with that kind of payroll, those stars?
Yeah.
That's stunning.
Absolutely stunning. And what it really does, I think, is it serves as this stark reminder that, talent on paper doesn't automatically equal wins, especially not every single night.
So what are the implications? Does a loss like this expose weaknesses?
It can, or at least it raises questions. People start looking closer at the lineup's consistency, maybe the pitching depth, even leadership, team chemistry, resilience.
Yeah.
Especially when the score is that lopsided.
And for fans or people following the league, betting, fantasy, this must shake things up.
Oh, definitely. It creates a huge narrative shift, right? Suddenly, the invincible Dodgers look vulnerable. Doubts creep in about their championship hopes.
Changes the conversation completely.
Absolutely. And yeah, for betting odds, fantasy leagues, an outcome this unexpected throws projections way off. It forces analysts, fans, everyone to kind of reassess.
It really highlights the unpredictability, which is part of the fun, I guess.
Exactly. That's what keeps sports interesting. These kinds of upsets inject drama, create new storylines. Will the Dodgers bounce back? Can the Cubs build on this? It keeps you watching.
So quite a range of stories today. We had New York looking at Bitcoin for state payments.
With that AG pushback providing balance.
Right. Then clearer rules for stablecoins from the SEC.
Which could boost real-world use.
followed by that crypto rally that kind of fizzled, showing fundamentals still matter.
Yeah, macro isn't everything.
And the Masters bumping up the prize money significantly.
Reflecting those bigger financial trends in sports entertainment.
And finally, that historic drubbing of the Dodgers at home.
A reminder that talent isn't always enough. Big upsets happen.
So when you pull it all together, you see these threads, don't you? Finance, tech, sports, all sort of intersecting and influencing each other.
Definitely. And it makes you wonder, right? Like, as digital assets get more real-world applications, like maybe paying taxes, how did the old traditional systems respond? Did they adapt? Fight back?
Yeah, and in sports, with all this money flowing in and these wild, unpredictable results, how does that keep shaping the stories we follow, the way we connect as fans?
Those are the big questions, the underlying currents we're trying to track here.
Exactly. So something for you, our listeners, to think about. As these lines keep blurring between digital finance, traditional systems, sports, entertainment, what new opportunities or maybe challenges pop up for you? How does it change how you interact with money or how you follow your favorite teams?
Lots to chew on there.
Indeed. Stay curious, keep exploring these connections, and remember to stay defiant.